JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 16th of September 2020. So yep, welcome everyone. Welcome to this Wednesday's afternoon session where we're gonna have a quick look at the markets and view the charts. The usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. So now let's see what's happening here. So not going to spend too much time on DAX. DAX is just flat. It's not doing anything. It continues to balance below this 13,314 level, a break of which we need in order to get a bit more comfortable with higher levels. But even it's not moving any lower. It continues to balance above this 21-day EMA here, shown as the yellow line. So for now, basically, we wait. Same analysis remains as I've talked about it this morning and yesterday as well. So yep, for now, like I said, no changes there. Jumping into S&P 500 now. Here the index yesterday managed to close slightly in the positive territory. However, as you can see, it kind of made its way back down below this 21-day EMA. It came very close to this level 3,425 that I talked about yesterday, and it failed to test it and then reversed back down. Now, if we look at the cash index right now and where it's currently trading at, it is slightly above yesterday's close at near 3,415 mark. So basically, it's sitting somewhere around here above this 21-day EMA. Now, this might be seen as a good positive sign. However, as I said before, in order to get a little bit more excited about higher areas, a break of this level here would be needed above this 3,425 zone, marked by the high of the 10th of September. In terms of the downside, we would need to see a nice good daily close below this 3,329 territory in order to get a little bit more comfortable with lower levels. Now, DXY, so the dollar index is on the weaker side today, and you can see it kind of is declining. It initially did try to make its way above the 21-day EMA. However, as you can see, it reversed back down, and yep, it's now kind of seems to be willing to move lower. However, just to be on the safe side, wait for a drop below yesterday's low near the 92.79 territory right here, just to be on the safe side, and to continue targeting lower areas. If it doesn't do that, well, maybe the bears are not actually ready to drive this one lower. However, of course, all eyes today are on the FOMC. Yep, on the FOMC tonight. So the Federal Reserve, of course, they will be announcing the interest rates, which, to be honest, will remain the same probably. But there are a bunch of other things to watch. The new updated dot plot. So yeah, keep your eyes on that. We might get a bit of dollar volatility here later on. So like I said, be very careful for now. Now jumping into silver, and silver is trying to make its way higher. It is pushing north here. However, it's still struggling with this 27.49 level that I talked about this week. So in order to get a little bit more excited about higher levels, we need to see a nice good strong push above that area, and then yes, we could consider further move higher. But at the moment, it's stuck here, it's stuck below this level. So so yep, let's wait for that confirmation break first. and then we could consider higher levels. If by any chance this one reverses sharply to the downside and drops below the 21-day EMA here and also falls below the 26.06 level, now this is where it could become very interesting for the sellers again, and we could see this one going for a bit of a larger correction to the downside, because don't forget we're still excuse me, trading above this upside support line taken from the low of the 18th of March. Jumping into Bitcoin, and this one is trying to make its way higher. Now this week I talked about Bitcoin and I was saying that even if it travels back above this 10,491 territory, yes, there is a good chance for this one to move further north, even if it climbs above the 21-day EMA. However, just to be on the safe side, preferably a push above the 11,100 zone right here could do the trick for more buyers, and this one we could start moving further north. But at the moment it's still not there. Yes, it is right here near this psychological 11,000 zone, but just like I said, let's wait for that push above this 11,100 territory, which, as you can see, recently acted as a good area of support, but now it's taking the role of resistance. NZDCAD. So quick update here. Yesterday and this morning I pointed out this pair here that there is a possibility to see a bit of a move higher here if the pair breaks above the previous highest point of September near the 0.8868 level. So as you can see, it pushed higher. It seems to be willing to move further north. Now if this daily candle here remains above this area, then of course, like I said, the next target here for us could be this 0.8916 level, and then we'll take it from there. We'll go step by step on this one. If by any chance this reverses back down and the daily candle remains below this 0.8868 zone, we'll take probably a bit of a neutral stand, because if it starts falling below the 0.8818 territory right here, this inside swing high of the 9th of September, then we could maybe consider a bit of a larger correction here to the downside. And the reason why I'm saying correction, because don't forget that we're still trading above these two upside lines. USDJPY, so this one is working out nicely according to the plan. Yesterday I talked about this pair, and today we're seeing, this morning I was talking about this one as well, and today we're seeing a nice push lower here. Now most likely it seems it could stay here unless, like I said, unless the whole FOMC meeting will reverse the US dollar to the upside, but of course for now everything's looking quite pessimistic for this pair, and the next target at the moment, at this point in time, is the 104.19 level, marked by the lowest point of July. But like I said, let's keep an eye on today's news, be very careful, and like I said, if we do get a surprise here and we do get a reversal back to the upside, then well, I mean, keep your eyes of course on this 105.30 zone. If the rate moves back above it, then well, maybe it's actually willing to go for a bit of a larger correction here to the upside. But again, like I said, at this point in time, everything is looking quite bearish for this pair. GBP and ZD, so I haven't looked at this one for quite a while, and you can see it with the kind of absence of a few lines here, but nevertheless, what's interesting here is that the pair, after finding resistance near the 2.0270 territory, it started moving lower, and it dropped all the way here towards this little level right here excuse me, near the 1.91 zone, from which it kind of rebounded and is trying to make its way higher again. Now this move higher is currently considered as a nice temporary correction, because let's say from the short-term perspective, we do have this downside resistance line here taken from the high of the 21st of August, and in a way, as long as this downside line stays intact, yep, there is still a chance for this one to move lower. But if you're more on the cautious side, wait for a drop below the 1.91 territory, and then excuse me, and then we could consider a further a further move lower here towards the lowest point of July near the 1.90 territory right here, that psychological 1.90 zone. So at the moment, like I said, it is pushing higher. That's great. That's good news for the buyers, but from the short-term perspective, but if this downside line does provide decent resistance, then we could see a nice round of selling again. However, with the upside, if we get a push above this 1.9645 zone right here, then yep, we could maybe consider a bit of a move higher again. So let's keep an eye on this pair. Quick update on USDCAD. This is slightly, I didn't want to put these two very close to each other, the USDJPY and USDCAD, because here you can see that although the dollar is on the weaker side, the Canadian dollar is still weak as well. And both basically at the moment it seems like the two weak dollars are trying to battle it out. So for now we still remain, I would say, on this pair we still remain cautiously bullish. You can see that it's trying to kind of, the bulls are still trying to fight it. However, to get a little bit more excited about higher levels, a push above the 1.3240 zone right here would be required in order to consider a bit of a larger correction to the upside. In terms of the downside, a drop back below this downside line taken from the high of the 19th of March would be needed. And finally, EURUSD. So here the pair is trying to make its way up again. This morning I talked about this pair and I was saying that to keep an eye on this short-term upside support line taken from the low of the 14th of May. Now again, as what I was saying is that as long as this upside line stays intact, there is still a chance for this pair to move higher, but just to be on the safe side now, we would prefer to wait for a push at least above this 1.1917 territory marked by the high of the 10th of September, and then yes, we could aim for higher levels. For now, guys, it's just sitting slightly above this upside support line, and yep, we need to see a break of this upside line and a drop below this 1.1753 territory in order to get a little bit more excited with lower areas. But at the moment, like I said, it's still above this upside line, so it still has a chance to move higher, but wait for that confirmation break above the 1.1917 level. So let's keep an eye on that, guys. And like I said, keep your eyes on today's FOMC meeting. So I really hope you found it useful, guys, and thank you very much for watching and listening. There was a quick update, quick review, because there were, like I said, some of the instruments that I already touched on, picked up on, and not a lot has changed, but they're at very interesting levels, and that's why, like I said, I kind of mentioned just quickly those. But like I said, they do all present very nice opportunities, but at the same time, be very careful, guys. Have your stop losses in place always, and yep, I'll see you tomorrow where I'm gonna pick up on some of these instruments, some new ones, and then we'll take it from there. So please join me tomorrow morning as always on my Traders Espresso, 6 o'clock GMT time. For now, guys, I hope you have a wonderful evening, and I'll see you later. Thank you very much, and bye-bye.